What do we make of this quarter, Tim?
Well, you want to see from the company that the growth number is, to me, demand growth is what this is all about. And to the extent that ASP and price cuts actually fuel more demand, I think that's why in the short run, I think, first of all, the maturity of this stock to be doing what it's doing after hours, or at least to me, this is a testament to how much Tesla has kind of grown up, because the volatility or lack thereof, when there are different elements of this announcement that I think investors could have gone after. I think looking at the big picture and understanding where production growth is going to be plus or minus around where they were, I do think that the gross margin numbers are important, and I do think that it comes down to how are we assessing this company. It's interesting. We're not talking about non-automotive revenues, which are actually starting to have some material size to them. But I call this an auto company, and I call this an auto company at a time when automakers are under a fair amount of pressure, and I think Tesla should be as well. Stocks rallied 40% off of that 101 number we hit on Jan 6, I believe was the day, and it's surprising to me it's actually holding in this well.
Karen.
Yeah, I thought it was a really interesting quarter. I'm wondering, though, for the margin compression, how much of that is cost of goods sold? And how much of that is pressure on pricing? And I think to the extent that it's cost of goods sold, I actually think that they have an advantage. They're at scale. Those numbers you talked about before, they weren't at scale. Right. So they're at scale now. And so I think they do it better than some other companies. So to the extent that it's cost of goods sold, we're going to see that elsewhere. We don't know how much of that is pricing. I haven't looked through the mix yet. I'm not sure how much is mixed. But they talked about that price cut after the quarter was closed, right?
So they had a China price cut, which took place in December, which we're seeing the impact of theoretically now. And then we have the U.S. price cuts, which we'll see in the first quarter.
Right. So I'm not quite sure exactly where it's coming from. I agree with Tim, though, the idea that this, is moving a little bit here. So the trade actually was just to be short a straddle going into Tesla, which I would never have said before.
Right. Amazing.
We'll see what he says on the call. It's always colorful.
Yeah. Julie.
Yeah, I mean, I think it's interesting to note the gross margin, and I think it's hard to keep track of everything, right? Because you have things that are not related to the cars at all. You have the cost increases in terms of their materials. You also have the cuts in ASPs in China that are rolling through. I mean, to me, I just see increasing competition and increasing relevant competition. It's not people that just don't have cars that are nearly as good. They're really quite good. And there's also a little bit of incremental fear that everything that's going on with Elon at Twitter is actually having an impact on the brand and damaging the brand. I myself have a Tesla, wouldn't mind selling it. If anyone wants to DM me about it, that would be great. But I think there is longer term problems with this brand. And I think overall, there's going to be a lot of pressure on EV pricing writ large. And, they're competing against auto manufacturers who have scale and they have distribution, even more important.
So they're priced at a premium, obviously, Guy, especially when you're talking about the legacy automakers, which are trading at a single-digit PE at this point.
Yeah, and again, they seem to be focused on the automotive side of things, so let's focus on it. Declining margins is something that, is it a one-quarter thing? I think not. Typically, when you start that downward trajectory, it continues, and there is competition, clearly. I mean, the China story is, I think, somewhat mixed at best, if not challenged, and they're probably going to have a supply glut here in the United States. And to your point about PE, you look at it at basically a price to revenue. I mean, they're trading close to 4 times revenue, which, all right, maybe they're deserving of some type of premium. You look at the other auto manufacturers. I mean, Ford and GM trade at less than 1 time revenue. So I'm not suggesting it should go there, and Ford and GM are probably too cheap. But this stock has rallied probably 40% over the last couple months. It was in a downward spiral. I don't think this does anything to accelerate it to the upside from here.
All right, let's get more color on this report with Gene Munster. Gene is the managing partner